Hi everyone, this is Charandeep Kapoor. In this video, we'll be discussing the option chain feature inside the Delta Exchange platform. To reach to the option chain, you have to click on the Options tab on top. Delta Exchange offers you options trading for both Bitcoin and Ethereum, and for both of these assets, you'll find currently there are three daily expiries open, that is the 19th, 20th, and 21st of December, along with two weekly expiries of 22nd December and 5th Jan, and two monthly expiries of 29th December and 26th January. So I've currently clicked on the monthly expiry for December, that is the 29th January expiry. For this, option chains are also available in the stock market. Sensible offers you an option chain along with Upstocks also does the same. Delta Exchange's option chain is more comprehensive and offers you all of the features which are available with both these exchanges, along with some more features on top of it. So let's study the option chain and what features it offers us. In the middle of the option chain, you will find the strike. Strike represents the strike price of the options. Towards the left of the strike is the call options, and towards the right is the put option, which is same as what you see in the stock market also. Denoted second column is open interest, which denotes the open contracts of options which are being bought and sold right now. As we can see, there are the numbers of the open interest are also shown, as there is around 1 million OI in the call side for the 37,000 strike and 1.38 million on the put side. The second column is the bid quantity. Bid quantity represents the amount of Bitcoin options available at the bid price. So if we look at any option, you can just click on that option and it will open up the order book for you. So as you can see on the best bid, that is 335, we have around 3.378 contracts, and this is the same data which you'll see here. So the bid price represents the best bid available and also gives us the bid quantity. The same is the case for the ask price and the ask quantity. Mark price is a price which is calculated, which is the fair value of every option, which is calculated by various methods, including Black-Scholes model, binomial model, etc. If you scroll further, you'll see the delta for every option. Delta represents the change in price of option for every $1 move in the underlying. After that, you'll see the volume. Volume represents the past 24-hour volume of every contract. Delta also offers you the flexibility to choose to display which of these features you want to see in the chart or not. And since I've chosen all of them, so these are all of the features which are available inside the platform. You can also expand the option chain if you want, and you can see it in a bigger view, which will show you all the option Greeks as you can see here. So I can see the delta of the option, the gamma of the option, vega, theta, and so on. Also, the positions which you have taken, the trades which you have taken will also be shown on the option chain. For example, as you can see, I have bought one call option at the 40,000 strike and sold one put option at the 40,000 strike, and these are my position sizes against it. So I have bought zero point 0.1 size contract and sold zero point 0.1 size contract. And similarly for all other strikes, these are the positions which I have taken. Apart from that, you also get the 24-hour change, which represents the change which in the options price is in the past 24 hours. Along with that, you get the OHLC data, which is the last open, high, low, close data for these options. Now, using the options chain and making some conclusions, so you can look at the options open interest data, which is a very valuable data point in looking at how traders have positions themselves on various options. So as you can see in the put options, the 37,000 and 38,000 put option have a very high OI along with the 39,000 put option. In the call side, if you check out, in the call side, there is high open interest on the 45,000 strike. Now, in the strikes where the options open interest is very high, it means that traders have created a lot of buy and sell positions on those options. And whenever the price of the asset reaches close to those options, the price is likely to face some sort of a resistance or support and not break these levels very easily. So we can say with a very high level of confidence that if Bitcoin was to fall to 39,000, it would not fall directly below it, and it will take some time before these positions can be exited or entered again. Same is the case with 45,000. So we cannot expect a big rally to continue and breaking the 45,000 level very easily, because there is high open interest in calls build up at that level. And if Bitcoin was to reach to 45,000, it would lead to a lot of positions being interchanged on the 45,000 strike with people buying and selling that option, which would cause the price of Bitcoin to slow down for a bit. And there are various other metrics which you can use for uh, predicting market movements and for taking your positions. And a major one of them is called the delta of the option. Now, in delta, there is standard practice for option sellers to use delta as a metric of the percentage probability of that strike ending up in the money. So, according to probability, there is around an 84% chance that this option ends up in the money, that is Bitcoin expires below 39,000 on the 29th of December. Also, you can use other metrics like gamma, vega, and theta to judge the overall Greeks or the overall values for your portfolio. You can add up the Greek values for every strike which you have taken multiplied by the quantity to get the net theta value for your portfolio, to get the net vega, gamma, and delta values for your portfolio, and make your positions as delta neutral as possible or close to the maximum delta you want.